This is like the our biggest challenge, which is maybe the one that I like to have because it's all these challenges are coming because we have users, and the chain is on a daily basis. When you look at it in normal transactions from applications from users, just from people using the network, when you look at those about 30 million transactions per day. 30 peak day was like 65 million. That's more than all the other chains combined. Binance Smart Chain is 1/10 of that. I think Ethereum is 1/30th. And because of this load, we kind of see things that we didn't expect. And we were a bit, I think, short-sighted in the kinds of attacks people would throw at the network. And what we started seeing are bots that are designed to snipe mints, like NFT mints. This is all because of NFTs. There's some auction for some NFT, and people want those NFTs so much that they figure out how to create these bot armies that generate 100 gigabits and one that's like 10 to, I think some people have seen 10 million packets per second being submitted to a validator.
Wow.
And if there's a bug in any one of these validators where memory grows, really, really quickly, or something that we didn't do well for that load, that validator could shut down, right? Could break, could run out of memory for whatever reason. And if a third of them do that, then the network is basically stalled until some manual intervention brings it back up. So that has happened a couple times. And not only that, there's also been congestion events where there's enough spam, but it's not enough spam to knock it over, but it's preventing users from using it. So that's been, I guess, our curse, but it's because we did, like, the network is so cheap and fast that there's enough users and applications that is driving that. And it's one of the really most frustrating problems because the release process for these networks, that's the closest thing I've seen in software to how a chip is built. Once a chip is out, if there's a bug in it, you're kind of screwed, right? You've taped out the wrong thing. It's hundreds of millions of dollars to fix those bugs. So once there is a release, like 1.9 was plagued by these. We had 1.10 baking on testnet. We're verifying it. We're getting it through audits, and we knew that it was going to address some of these fixes. But that time to do it right and make this release is like 10 weeks, right? So for those 10 weeks, it just sucked. Like you as like us as engineers, we're like, no, we can, like, stuff is gonna get fixed. And it's hard to predict how well the fixes are gonna, like, have impact on the problems you're seeing. But luckily 1.10 shipped and a bunch of these issues have been solved. And there's a bunch of technologies that are being enabled to, I think, really address a lot of the reliability problems to the point that I think we can stop calling it mainnet beta and just call it mainnet.
Yeah, and I think, I've always taken the view of it. It's really interesting because I don't ever look at anything in its current state, particularly in this world, because to do that is ridiculous because, the pace of accelerated change and improvements and iterations is so fast that you have to say, is this likely to be resolved or not resolved? There may be other problems and other issues that come. That's fine, right? And that's how I look. I've always looked at it, and I saw this happening, and I thought, I find that a positive signal because it's not because what it means is we see issues, you can get them solved and work on them. Now, whether the fix comes out in a month or a year, it depends what it is. But
yeah, hopefully not a year.
Don't like it because the Bitcoin world doesn't work that way, or at least hasn't for a long time.
Yeah, Bitcoin has different issues. It's designed, to be extremely resilient. And some things that are normal for Bitcoin, like when a bunch of Chinese hash power shut down, there were times where there are 2 hours between blocks on Bitcoin, and that's totally fine. If there's 2 hours between blocks on Solana, the network's dead because it's designed to make a block every 400 milliseconds. So, like, pager duty is going off. People are trying to figure out why, like, how is this possible, right? So you kind of have, once you make a faster network, the failure case is different than one on something like Bitcoin or Ethereum, right? Even though in both cases, the data is never lost. You're never never threaten the state. Like the actual thing that the network is securing is this copy of the ledger that's replicated. On Solana, it's close to, about 4,000 times, and Bitcoin's about 12,000 times, and Ethereum's like 6,000 times. That's the security in the network. That's what you're trying to protect. As long as that state is replicated and at least one of those copies survives and is able to tell the world, no, look, here's the valid copy. I have all this cryptographic signatures to prove it. Everything is fine in terms of the security of the network. But reliability, when you've designed something to run like at a 400 millisecond step, is totally different than something that runs at a 10-minute step like Bitcoin. So we have just a whole different set of challenges than a network like Bitcoin.
One of the things that you've probably heard that I spend a lot of time looking at Metcalfe's law and how to value these networks, and that's when Solana really got onto my radar screen, because it's the only thing since ETH that I've seen where we've seen so many users accelerating such a pace over time. It slows up and slows down depending on what's happening in the market, with the amount of connectivity between the nodes, i.e. the developer activity and other stuff going on. How the hell did that happen? Because it's pretty extraordinary. It was quite a big breakout versus almost any other chain, right? I think the only one, Polkadot, has something similar, but not in the same way with end users. They've got quite a lot of developers. How did that happen?
We got lucky in a couple decisions, I think. So we never raised a ton of money in those early days. We were always kind of had 18 to 20 months of runway. Our competitors raised hundreds of millions of dollars. We had like a big break where we raised 14 in like the summer of 2018. So we never had enough runway to like build EVM compatibility or anything that wasn't like purely necessary to show that the network was fast. So we had our own set of like our own language, smart contract language, and engineers are naturally curious. And that was like, I think, a really good decision. Had I had more resources, we probably would have built EVM compatibility, and then we would have been one of the 10 EVM chains trying to compete with, L2s and Ethereum itself and like a whole bunch of other like things. The other thing that we made the right decision was that when we were launching, we launched March 16th. Like we announced our auction, I think March 9th or March 10th or something like that. The network went live. 3 days later was the double black swan. Everything in the market crashed. Bitcoin dropped, and the S&P 500 dropped by by 70%. This was 2020 March. We were just so exhausted from getting to the point that nobody wanted to delay, so we just went for it. And that was another, I think, lucky decision, because we were just a hair earlier than all the other next generation chains, earlier than Polkadot, than Binance Smart Chain, than anyone else. And because we were new and had like new properties, that I think got the ball rolling with devs. Like devs are naturally curious and they want to try new things. You give them new tools, they'll go start messing around. And just being, I think, these are like decisions that are really hard to predict will have that much of an impact. But looking back at it, that I think those two things like played a really outsized role.
The other thing that had an outsized role that you probably weren't expecting was NFTs.
Yeah, this was NFTs, CryptoKitties, like literally, this was something that, we in our marketing slide, like, look, CryptoKitties knocked down Ethereum. This one happened on Solana, but we didn't really think about them. Like the Solana's tagline was blockchain and NASDAQ speed, and we really focused on projects like Serum. But we saw NFTs were started to happen on Ethereum, and they were interesting because they were forming communities. There were people that were getting into these PFP sets and kind of acting like early bulletin board style social networks, like in the 90s. So we had two engineers from labs build out the smart contracts to define the NFT standard, and kind of like that was the Metaplex being incubated. And as soon as that was launched, and we had like a couple mints that we got together, like we scoured the earth for anybody that would want a mint on Solana. Nobody really wanted to at the time.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.